Now, this is a general view of Euro USD. USD was actually selling. It was actually selling till this is a change of character. Sorry. This is a change of character, which tells us that, okay, market has changed direction to bullish. So now, market broke structure to the upside. Now we are expecting the market. We're expecting the market to drop down from here to here. This is a fair value gap. Yes, this is a fair value gap. So definitely, market is going to come down to this point of interest here before we make our entry for a long buy. If you scale down to 3 hours time frame, you see that this is a fair value gap. But now, since we are expecting the market to drop down, we are going to counter trade. That is, we are going to sell down to buy. So now I'm doing this video to show you guys why liquidity and how you can spot liquidity and why is it so important. If we go down to 1 hour time frame, market broke structure here. Market broke structure here. Here, this is a market break of structure. Now, and if you confirm a break of structure on a 1 hour time frame, it means it's a valid break of structure. That's for me. If I see a break of structure from 4 hours, 3 hours, 2 hours, 1 hour, and probably 15 minutes, at times they are valid break of structures. So I move down to my 15-minute time frame. 15-minute time frame. Now, look at the overall break of structure. So after market make that break of structure, then we are expecting market to drop down to our POI, point of interest. Now there's no point selling down here to buy, because this is going to be very, very fast. So after that break of structure, I mapped out my point of interest. This is my point of interest. So what did market do? Market started coming down from here, coming down. Now this you are seeing here is a liquidity sweep. It's a liquidity sweep. And here now, this other wick here, this is your inducement. These are inducements. Let me show you. Go down to 5 minutes time frame. Look at it. See, this is a liquidity sweep. This is a liquidity sweep here, and this is inducements here. So remember, markets dropped into our point of interest. Now, if you observe, markets tapped into our point of interest and tapped into this point of interest and gave us this profits, clearing this high. Now, this is sweet trade, and it's valid because of the liquidity sweep here and your inducements. So now, there are some other liquidities down here that market didn't clear. Remember, market just tapped in and took out this high. Now, what did market do? Market later came down to clear this liquidity, to clear liquidity again. To clear this liquidity here. This is a liquidity sweep. This is a complete liquidity sweep here. Even clearing this one here. So now, after clearing it, after market cleared out liquidity, then what happened? On the 1 minute time frame, after clearing it, look at it. after coming down to clear it here, market shifted to the upside, gave us a change of character to the upside. Now, what do we expect? After a change of character, you expect market to come into your point of interest, which is this guy here. Now, I took a buy order here immediately to take out this high. Now, some people might would have taken out this use this high as their take profit, which is good. But why I chose this level here, it's because this is a zone. This is a value zone. That's why I have to use this place as my take profit. You can also use this high as a take profit, which is good. But I prefer using this one on this trade. So this is how the market came in and tapped in immediately and also gave us a massive buy. This is a win-win. This is a win-win. And if you have if you took this trade, now if you were the one that took this trade, rather, you see that after taking another high, market did what? Break above the high and came down. We tested again, the same procedure. We tested again. Now, market didn't come down here now. If you observe, markets didn't come down to this level. Why? Because there are no liquidity for it to clear out again. What did it do? It came down here. It came here, and now this is where breakout block comes in. These points now, it's where breakout block comes in. This is a breakout block here. This is a breakout block. Yes, this is a breakout block. And what will you do? Once you spot a breakout block, immediately you take your buy order at your breakout block, setting your SL. I will set my SL if I was on this trade. I will set my SL below this candle here. Then target this high again. This one now will target the high, this high, and hit full take profits. Because this is a breakout block, there are no liquidity for it to clear out. It has already cleared out all this liquidity down here and give us another entry to buy. Now this is how you trade with liquidity. And remember, the general view of this market is coming down. It's coming down to retest this fair value gap. So eventually market is going to what? Eventually market is going to break below. Market is going to break below this swing low here. This swing low here. Market is going to come down to break below this swing low and give us what? Our change of character. And once it gives us our change of character, we'll map out our point of interest again. Then look for our entry to sell down to this nearest key level of a zone. So to this zone here. So that's where I'm going to sell down to. If markets gives us our change of character. So that's how you use liquidity in the markets. This is how you understand liquidity. All these things that is happening here now, market is forming liquidity. So definitely once it has broken structure down, then I'll look out for my point of interest. Unless markets want to continue bullish, because you can't predict what the market can do. So I'm sorry that you're not seeing my face. I'm only using one phone to make these videos. So probably with time, I'm going to get a camera whereby you will see my face and knowing me better. So for now, I would like you guys to give me a like and a follow to drop more updates about Forex. So